As a passive income investors, you might be investing your money and receive those distributions and you forgot completely that there's something might happen. What happens if YieldMax goes bankrupt? YieldMax is one of the hottest names in the high yield ETF space. But what if the unthinkable happens? What if YieldMax goes bankrupt? Today we'll explore the possible scenarios, what it could mean for your investment, and how to prepare for such a situation. Let's dive in. Hello fellow passive income investors, welcome to Think Passive, a channel where I dive into the world of investments, especially ETFs or stocks that have higher yield and pay weekly, monthly, yearly, and now and then I talk about growth investments and crypto as well. Here's the scenario number one. YieldMax closes its funds. The first possibility is that YieldMax shuts down its ETFs. If this happens, the fund's assets are liquidated and returned to investors. This sounds simple, but here's the catch. Investors will receive the cash value of the underlying assets, which could be higher or lower than the ETF price at the time of liquidation. Depends on the market situation. The impact of that will be you lose the ongoing income stream from dividends and the reinvestment risk arises. Where do you put that cash next? That depends on the opportunity that comes after. Bottom line, it's disruptive but not catastrophic if you have a plan. Scenario number two, YieldMax parent company files for bankruptcy. If YieldMax's parent company files for bankruptcy, what happens next depends on the custody of assets. Most ETFs hold their assets in trust, separate from their issuer. The fund should remain intact in this scenario, but management might transfer to another provider or dissolve if no buyer steps in. The impact of that will be the dividend payout might halt temporarily during that transition. While it's not ideal, the separation of assets provides some protection for investors. Let's explore scenario number three, and this is the worst one. Total mismanagement or fraud. Now the doomsday scenario. Fraud or severe mismanagement. If YieldMax was running unsustainable strategy or worse, a scheme, things get ugly. Fund could collapse, leaving little to no value for investors, and the impact of that will be the recovery might involve lengthy legal battles with uncertain outcomes. This is extremely rare in ETF world due to regulations, especially in the United States, but no system is foolproof. So now we've talked about all these bad things that might happen. Let's now dive into how you can actually protect yourself. So what can you do to prepare for the unexpected? The first thing you should do is diversify. Don't put your eggs in one ETF basket. Number two, monitor fund health. Keep an eye on issuers' financial report and market activity. And that's when this channel comes to play, because on this channel, I always keep you up to date on the changes that happens to ETFs or ETF provider, or whenever there are change of structures. In order for you not to miss this type of update, make sure you get notified by subscribing. Number three, on how to protect yourself, have a backup plan. Know where you would reinvest if something goes wrong. Remember, even with high yield ETF like YieldMax, no investment is risk-free. In conclusion, while the chances of YieldMax going bankrupt are slim, it's always smart to understand the risks. Being informed and prepared is the best way to safeguard your passive income journey. Let me know your thoughts. How would you handle this scenario if this happens? And as always, don't forget to like, subscribe, and stay ahead with Think Passive. See you in the next video. Oh, by the way, also just check a link below. I'm going to leave the whole article on my website, which is www.thinkpassive.com. www.thinkpassive.com. Thank you and bye-bye.